Good morning, everyone. Welcome to Daily Rates Live with the Mortgage Calculator. Today, we're going to go through some live mortgage rates for different programs, and then we're going to do a deep dive into manufactured home loans. We'll wait just a minute here to get started. Let everybody have a chance to jump on. Let us go live on all the different platforms. We put the chat up on the screen, so feel free to drop a comment there as you tune in. It'll show up on the screen. I see some comments were already coming in there. Appreciate you tuning in nice and early. And we'll get started here in just a moment. Great topic today. A lot of misconceptions about today's topic, so it'll be good to go through. We've had a few other trainings on this as well, so you can check out our YouTube channel to see more manufactured home loan trainings and even some more in-depth ones from our loan officer trainings. But we will go through them here today shortly as well. All right. Thank you for the comments coming in. Appreciate it. Looks like we are ready to get started. Keep dropping comments there as you tune in, and you can drop any questions you have in the chat as well, but we can go ahead and get into it. So we'll take the chat off the screen for now, but keep dropping comments in there. So welcome, everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey. We are a correspondent lender that specializes in non-QM loans. And what we do every morning on this show is pull up some live mortgage rates to see what the market is looking like. And then we do a deep dive into a different loan program. Today's deep dive is going to be manufactured home loans. So what we'll do first is let's go ahead and pull up our pricing tool, Nick, and let's go through some live mortgage rates. If you're ready there, let's pull up the pricing and see what the market is looking like this morning.
All right, switch the screen and we'll check it out. So this is our pricing tool for our team of mortgage professionals. This will show us the general rates and APR for today. It is November 15th, just after 11 a.m. If you'd like a full breakdown, a full loan estimate, please get with one of our team members. We have over 400 licensed loan officers in 24 states. So for the demo today, we'll set up a scenario to compare across the programs. We'll set a $400,000 loan amount. We will set an 80 LTV, 20% down payment. And we will search for the lowest rate options for conforming conventional. And then we'll check out FHA, which is usually the next option. And then we'll go into our expanded guidelines, also known as non-QM. We also have VA and USDA. VA is only for eligible vets and active service members. If you are, just let us know. USDA is only for eligible properties. If you do happen to be looking at one of those, just let us know. We'll start with conforming purchase, 30-year fixed loan, primary occupancy, single family home, 1 unit, state of Florida, county of Miami-Dade. And for all the demos, we use an estimated credit score of 760 and an estimated debt to income ratio of 40. So with these settings, let's check the rates as we do every morning. Not much change here. 6.875 rate, 2.375 discount points, puts the final APR at 7.087. So good option for our customers looking for conventional. That's about a point down from where it was a couple weeks ago. So definitely good option here. And if for any reason our customer doesn't qualify for the conventional, we want to check out the FHA options, which do allow more leniency on credit issues, as well as a much higher debt to income ratio. So we'll keep everything else exactly the same. Now we can compare the FHA programs apples to apples and compare the APR here. So it looks like this morning, the best option, 6.125 rate, 2.5 discount points in costs, put the final APR at 6.768. So good option here for our customer that needs to use FHA. And if our customer qualifies for both, this is actually a cheaper option in this case. So definitely want our customers to not overlook the FHA options. These APRs do include the upfront and yearly mortgage insurance here. Now, if our customer doesn't qualify for either conventional or FHA, many other banks or lenders will have to deny them. But that's where we love to specialize with our non-QM programs. So under expanded guidelines, we have over 5,000 additional non-QM programs we can check out if our borrowers, for any reason, don't qualify using the standard documentation there. So everything else will stay the same. However, we get a new option here for income. Full doc is what we use for FHA and conventional. So if our customer doesn't qualify using full doc, typically we're going to choose a different option here. We have asset related options, business bank statement options. The investor options are just for investment properties. Personal bank statement 12 month is what we use for the demo here. That's the most popular. We also have RSU stated, income, VOE, 1099 programs, P&L programs, and no income CDFI programs, all kinds of different things. The 12-month program for bank statements is what we always use for our self-employed borrowers. That's because many times our self-employed borrowers have issues with their tax returns where they may not qualify at all, or just may need a little bit of extra income because they may have various write-offs. So we solve that problem, no tax returns at all, just their last 12 bank statements to determine a debt-to-income ratio of 40% here in this example, using just their cash on the bank statements. So most of our self-employed borrowers will qualify for much more income because they do make money there on their bank statements. So let's check out the bank statement options today. That was quick here. Best option at the top, 7.5 rate, 2.375 discount points and costs. Put the final APR at 7.613. So this is a good option for our customers that must use the bank statement. And as you can tell, it's almost identical to conventional. We're within half a point there of the conventional options using these alternative incomes. So definitely good options here for anybody that needs a little bit of extra help. And before we go into our topic, we always do investment property live pricing. So for our final two demos, we'll do some investment properties. We'll set up the same scenario, 400,000 loan amount. We'll set the LTV to 80% loan to value, 20% down payment. And we're going to look at the lowest rate options for conventional investments, as well as comparing to expanded guidelines, also known as non-QM. Remember, government programs, FHA, via USDA, do not work for investments. So we'll just set this up. Everything else will stay exactly the same. All we've changed here is the occupancy. Now, let's check our conventional options here. And where's the portfolio? A little better place today. So conventional investments have been very high priced lately. Not many takers on these options, but with the recent downward momentum, some of these options are now becoming better. Option here at the top, 7.499 rate, 3.25 discount points and cost. Put the final APR at 7.741. And if we scroll down here, we have that portfolio option we always mention, which uses all the same underwriting as conventional. However, it doesn't actually have to use the same loan level price adjustments. So this price is the exact same as it has been for the last week or so, which was beating the regular for quite a while. And today it's in, it looks like 5th place, it appears. So definitely keep an eyeball on this as the standard conventional programs fluctuate. This will stay a pretty steady option. So keep an eyeball on those portfolio options if your customer is looking for conventional. However, our most popular investment option that we always want to go over are the non-QM expanded guideline options for investment properties. So the most popular income option by far is the DSCR, and that is because it doesn't require any income or employment info from our borrower or documentation. It simply uses the estimated rental income from the property to determine a DSCR value. If the DSCR ratio, debt service coverage ratio, is over 1.00, that means the property cash flows on a monthly basis. We even have options for ratios under 1.0 where the property may not quite cash flow on a monthly basis. For the demo, we always use 1.5 so we can see all the programs. And prepayment penalty is standard on these programs. We could select 0 if we wish. That will cost more and limit the programs that show up. We can select 5 years, which does save some money, but not all programs allow it. 3 years is standard. That's what we use for the demo here, so we can see all the options. So let's check out the DSCR rates today. Oh, we have one. I think this is almost identical or beating conventional. So amazing when DSCR is beating conventional here. 7.625 rate, 3.5 discount points and costs. Put the final APR at 7.775. So good option here. This beats pretty much all the conventional. I'd say 100% of investors comparing a DSCR loan at almost identical cost will choose a DSCR loan. So definitely want to present all of these options to our investors out there for the flexibility and ease. And if we scroll down here, there's dozens of different options. Some of these may allow bankruptcies, foreclosures, other credit issues. Some may allow short-term rental income to be used. And some of these, or actually just a couple of them, at a little bit higher costs and rates, do allow special property types, such as mixed-use properties, over 4-unit properties, small commercial properties. And our topic for today, which is, let me switch my screen real quick. Manufactured home loans. So yes, there is a DSCR option for manufactured homes. Obviously, we don't do it on the live pricer. It is a special option. But I hope Jose has loaded that up. So I'm holding it down for Jose today to go over the examples here. But he has loaded me up a few manufactured home examples. We'll go through the typical primary examples, and then hopefully we have a few investment examples, including our tricky DSCR manufactured home loan, which not many people have out there. So let me go ahead and switch my screen again, and we'll start going through these options for manufactured homes. All right. So it looks like he started here with a pretty standard option. So manufactured home, definitely FHA is a good option, typically kind of the standard option here. Looks like he went with the standard 96.5 LTV for an FHA loan, 3.5% down. And our rates here, let me click these options, are pretty good for manufactured home. Great option for someone looking for their first home. Manufactured homes are definitely often overlooked, I would say. Also, make sure, I guess Jose would want me to put some caveats here. Remember, manufactured homes are not mobile homes. Manufactured homes are permanently affixed to the land and titled as real property, and obviously must own the actual land underneath of them. So a lot of people get confused on what a manufactured home is, but we have those trainings on that in our loan officer training series. So once you've established that we're doing a manufactured home, all of these, it looks like Jose has about 8 options for us to present today, will work for any true manufactured home. So this option here, 7.25 rate, is the highest rate option for the lowest cost. That comes with a little over $1,000 credit in this example. And the lowest rate option here, 6.25 rate, has a cost of 2.375 there. So great options for FHA. Not really much of an adjustment there to do a manufactured home using FHA. So definitely look for those options, especially as supply is limited. Now, I had it pulled up earlier, it's got to refresh. Here we go. So this is Jose's example for a manufactured home using conventional, using the MH Advantage is the coding there that you'll see on this program. That allows us to go up to 95 LTV using conventional financing here for a manufactured home. So some borrowers that don't want the FHA MI may look into this conventional. Obviously, this will require PMI, but not the FHA MI, which is definitely something to take into consideration. The highest rate option, lowest cost, is going to be 7.624 at par at no cost. And then our lowest rate option, 6.875 for 2.25 discount points and costs. So these are good options for our borrower looking to use, again, those conventional programs where the PMI is a little bit more flexible. Now, let's switch over to the other conventional option here, which would be the home ready MH advantage. So stacking a couple different specialty programs there together in order to get our borrower to 97 LTV, 3% down here on a manufactured home purchase. So a little bit higher rates, it looks like here, because it is a little bit higher LTV, a little bit more of a special program. But home ready and some of these other options do have reduced MI if our borrower does qualify for these specialty versions. So highest rate, lowest cost option, 8% rate for just a slight cost there, 0.125, and a lowest rate option of 7% for 2.25 discount points and costs. So good options here for our borrowers looking at the super low down payment option. And again, the conventional MI is sometimes preferred. Now the next option Jose has for us here, USDA, very popular choice for manufactured homes. Many manufactured homes are in USDA eligible areas, so definitely want our team to keep an eyeball on this. 100 LTV, obviously standard USDA options here. Highest rate, lowest cost, 7.625 rate, has a slight cost there, 0.375. And the lowest rate option for 100% financing, 6.625 rate for 2.125 discount points and cost. So again, 100% financing, 500,000 purchase, 500,000 loan amount there. So great option for those properties that are in USDA eligible areas. Make sure you check those maps. A lot of manufactured homes do happen to be in those areas. And what do we have next? VA. So the other 100% financing example, obviously, VA goes up to 100% and manufactured homes are eligible. So here we have the standard VA purchase, 100% option, highest rate, lowest cost, 7.625 rate, 0.949 cost there for the 100% option, and the lowest rate option, 6.625 for 2.574 discount points and cost. So good option here for our VA borrowers that happen to be looking for a manufactured home. And remember, this doesn't have to be in a specific area. Our VA eligible borrowers can use this 100% option anywhere that they can find an eligible manufactured home, or any home for that matter. And here's where we start getting into our specialty. So these are manufactured home options, non-QM. So this is still full doc, but non-QM full doc. We can go up to 70% LTV. So with this option, let me click these open here. This is still primary option. I just wanted to double check what he put here. So this is still a primary option, but obviously using non-QM guidelines is going to be a lot more flexible for us here. Best cost option, 9.49 rate, 4.338 in lender credits. Good option there for someone looking for lender credits. And our lowest rate option, 8.25 for 2.375 discount points and cost. So these are our non-QM options for manufactured home using these alternative income, even though this is the full doc option. Let's see what we have next. Just going to be probably another non-QM. And yes, bank statement. So last time we looked at full doc, typically we're going to go non-QM to use some sort of alt doc. And this version is the non-QM bank statement version. So similar to what I do in the live rates every day, 12-month personal bank statement program is the standard here. And we can go up to 70 LTV using this alternative documentation for a manufactured home. So good option here. Let me open it up. And this is still primary, just to double check. So the highest rate, lowest cost, 9.49 rate is going to have a slight cost here, 0.125 discount points and cost. And our lowest rate option, 8.375, is going to have 2.5 discount points and cost. So good option here. This is definitely a popular option for those borrowers that need to use alternative income. We do have that for manufactured homes, which is awesome. And I believe this is another non-QM. Yes, the non-QM P&L is going to be about the same here, 70 LTV, similar to the bank statements. A little bit higher rates and costs usually for P&L, a little bit more risky type of income documentation. So you see that reflected in the rates here. So highest rate, lowest cost option is going to be 10.125 for manufactured home for 0.125 cost. and the lowest rate option, 8.75 rate for 2.375 discount points. So this is a good option for our borrowers that need to get even more flexible with their income, still have options for manufactured homes, which is amazing. And second to last, we have our DSCR. So this one is the unicorn. Not many people even know this exists, but we have our DSCR, no income, no employment required, investment property purchase, up to 70 LTV for a manufactured home. So this program doesn't really exist. Not many people know it's out there. Please know we do have this option. Definitely make sure you lower the LTV to 70. A lot of times that's an issue. People are asking for higher LTV than we can have, but these options are amazing to get at 70 LTV. And actually very similar structure there to the primary non-QM loans here, which is amazing. So highest rate, lowest cost, 10.375 on a par for a DSCR, no income, no employment manufactured home loan for investment. Absolutely amazing. Those properties typically cash flow very highly. And our lowest rate option, 8.49 rate for 3 discount points in cost. So we can buy it down pretty good there. A lot of different options for our borrowers looking to make that extra rent income and DSCR ratio that comes typically with manufactured homes. Usually no issues with the DSCR ratio here. And let's see what his final option is. Probably cash out, I'm betting. Let's see here. Yes. Manufactured home, DSCR, cash out refinance. So typically there are no options for financing investment properties that are manufactured homes. Not only do we have them for purchase, we have them for cash out, which is absolutely amazing. So this program is even more rare than those that see the purchase options. Cash out is even more elusive here. 70% cash out refi, manufactured home, DSCR, no income, no employment, investment property. Absolutely amazing. And the rates are not that much different. 10.75 is the lowest cost. That will have a slight cost there, 0.125. And you can buy it all the way down to 8.75 rate for 3 discount points in cost. So nice big rate sheet here, lots of different options. Again, cash out, 70%, investment property, DSCR, no income, no employment. Absolutely amazing. So don't overlook those investment options. You won't find them in other programs, but we do have those for DSCR, which is amazing. And let me go ahead and switch my screen again. Do we have any questions, Kyle, that came in here?
Nope, no questions in the chat.
Okay. Well, I brought back up the topic. But if anybody has any questions, remember, check some of our trainings on exactly how to structure those manufactured home loans, the HUD decal plates, all that kind of good stuff that Jose goes through on the trainings. But when your customers come to you and ask for manufactured home options, you see we have many, and the very rare ones are the DSCR ones, and the even more rare, the DSCR cash out manufactured home investment. Absolutely amazing. So keep your eyeballs on those guys and take advantage, especially with low inventory, manufactured homes. If people know those programs exist, definitely will take advantage.
We get a lot of requests for because not everybody does those type of programs. So thank you everybody for tuning in. Remember, we do this 11 a.m. Eastern every weekday where we go through the live rates and then do a deep dive into a different topic. So we'll be back tomorrow with a new topic, and we'll check out how the rates are looking tomorrow as well. So thank you everybody for tuning in, and we will see you tomorrow 11 a.m. Eastern for the next episode of Daily Rates Live with the Mortgage Calculator. Have a great day, everyone.
Thanks, everybody.